What is going on, everybody, and welcome to the weekly update. Now, in this video, what I like to do is provide you guys a state of the market, some events that are going on in the current week, some earnings that are possibly going on, and some stock picks that I am looking at coming into the week. Now, if that sounds like something you're interested in, subscribe because I do provide daily updates as well to keep you prepared for each and every day in the market. So, being said, first things first, there's a lot going on this week. There's a lot been going on essentially since last week. But last week we had core CPI. It came in extremely bad, one of the worst inflation rates in 40 years. Things are not looking good. The inflation had a bigger impact than I thought it would because of the fact that the market in itself, just reading the candles, the market in itself was showing a lot of strength. It was almost if the market going into the core CPI, like the market didn't care. Like the market had already made up its decision going into core CPI, which came out on Thursday. And then the market was had essentially a flash crash and turned around within an hour and got right back up to previous day highs, and then it sat there until Bullard came on and started talking about started becoming really hawkish and starting throwing things out there. There was even articles published that emergency rate hikes were on track. It got so carried away that we started to flush Thursday. Then there was a lot of people. There was even Fed futures were pricing in like a 97% double rate increase in March. It was getting out of control Thursday nights, and then come Monday or Friday morning, a lot of even media news outlets were contacting the Fed, asking them what's going on. And then they became they were hawkish in a way, but they were still, they became very dovish and saying, okay, well, this is what's really going on. I don't think it's going to get that carried away. I think we might have a half a point increase in March, and then possibly another one later in July. But I mean, it's really up to Powell. And so what we're getting a lot of mixed signals from a lot of different Fed members. And that is what is wreaking the havoc in the market. The market doesn't know what to do. 1 minute, it's like the Fed is putting on the gas. The next minute, they're not. The communication is very bad. And then you have the individual bank CEOs trying to price in worst case scenarios. And so that's why we had that 12% correction. So the market, like I've stated before, if you followed me to this point, the market is really trying to price it all in, price in worst case scenario. And that's why we got a 12% correction in the beginning of the year. I'm still very bullish. I don't see this as getting out of hand. I think that correction kind of softens whatever blow is going to come from the Fed. But then we've had this whole thing going on with the Russia and Ukraine and everything. And then Biden was coming out talking about it. Now there's possibility that China might get along with Russia. And so and then there was World War III trending on Twitter. So again, this could be a temporary thing. The market really doesn't care about wars so much unless it starts affecting supply chains. When it starts affecting supply chains, then it becomes an issue. So to this point, there was just a lot of concern. I think it was just adding to still the fear of possibly an emergency rate raise because there is a closed door meeting, which normally typically happens on Monday, but that was floating around out there. And so people are concerned, well, if there's emergency rate raises, is this Monday meeting going to be just that? Is it going to be an emergency rate raise? But we have to understand, if we look at the events coming up into this week, Monday, we got James Bullard. So, okay, we're going to get some more. We're going to get some more. He might actually kind of clarify a little bit better because he did try to come out on Friday and say, hey, you know what? My bad kind of thing is really still on Powell, but I don't we're not going to be as hawkish as you all kind of just took and ran with it, but we will see. Right, he is still on Monday, so we have him Tuesday. We have Powell. We don't have the FOMC meeting. That's not until March. So you have to realize that that is still a long ways off from this point, but we will still see Powell, and Powell will still get asked questions on Tuesday in front of the Senate. It's related essentially to his renomination. So Tuesday we'll have Powell, but again he'll ask essentially the Senate will ask him a lot of difficult questions regarding inflation, very specific questions, trying to figure out what he's going off of, what he's gauging his rate raises off of, which is something they asked him before, and he avoided a lot of the questions. He was very generic about a lot of the questions, always saying it just depends. And so, being said, um, people started looking at data saying, okay, well, he said this, the jobless numbers. Well, the jobless numbers are bad, but inflation's getting really bad. And he said he wouldn't make a move until the jobless numbers got up, and they're not climbing up. But inflation, we've seen from the core CPI that inflation's getting bad. So you got these two different things that are not running in parallel like Powell wants. So it's really like, okay, well, what other things are you using to gauge your inflation's running away? And he's saying, no, it's not. I'm seeing this. And then he said, it's not transitory, but is it transitory? He's still acting like it's transitory. It really just depends. Again, I was kind of looking to see if he was waiting for that Q1. He was really trying to aim for Q1 and how inflation would be. But right now, everybody's just focusing on the core CPI numbers and what's going on currently. So again, the Fed doesn't seem to be panicked, but we really have to see what happens, because on Wednesday we do have the FOMC meeting notes, which provides the detail in the last meeting into why they felt they really need to start taking some action. Again, a lot of the meetings have just been there's talks, but the market, once the market gets word on, okay, well, there's talks of it, the market will freak out. The market will throw a fit. The market will try to price in worst case scenario. Now, there's a lot of different scenarios that can play out. And this is why I say you should always have a thesis, because there's a lot of different ways this can play out, right? Maybe we've overpriced what we think this rate raise will be. And so if the Fed come in under that, that could be very bullish. If they come in what we expect, that could be bullish as well. But if they overshoot it, trying to catch up with inflation, that could be really bad for the market. So needless to say, even if we come in at what is expected, that still, I think, will bring volatility. I think anything the Fed is going to say from this point is going to bring volatility. But now coming in over the weekend, again, we have the Russia-Ukraine stuff and all that talks. If nothing happens with that, it'd be really interesting to see what happens with the markets coming into this week. Again, the volatility is not going away. We still have earnings. We still have some great earnings coming up this week. We got Roblox. We got Airbnb, UPST on Tuesday, NVIDIA Shop, and Trading Desk on Wednesday. And so we still have a lot of great earnings coming up. As you can see, my watch list actually has a lot of these earnings on it for continuation. But my biggest thing here, actually, what I want to do here is add coin as well. So coming to this next week, you want to go, in my opinion, you want to go with where the strength has been and what earnings is show where the strength has been. So essentially in chips, Google has done great. Shop, I think, can do really good this week because of what Amazon pulled through. We do have Roblox. Roblox, I think, is kind of a hit or miss on what they can do, but I think it's one to really watch. UPST, now Affirm, got crushed last week. We have to see how UPST does. I think they can actually do very well. The bad problem is that it's been running kind of in parallel with the moves that Affirm has had. So anytime Affirm did really bad, it sold off with Affirm. But I want to see what it does coming into the earnings this week. Coin, again, big one is for crypto, Bitcoin. I want to see what Bitcoin does, especially with this inflation and everything. There's been a lot of great news on the crypto side, a lot of new things coming out as well as far as adoption for crypto. And so Bitcoin's been pushing, although it pulled back a little bit. I expected it to pull back, which we'll get into the chart here in a second. But Coin is one I want to watch because I think it's going to take off here as well. I think their earnings is actually the following week. So I think it's towards the end of the month as opposed to this week. So that's pretty much what I got for this week. So again, as far as SPX in general, key level here, I mean, we came crushing down. Most of the day was very slow. And then towards the end of the day, we started getting a lot of news on Russia and in China and World War III was all everybody was talking. And so the panic set in and everything just sold. We are sitting at the 200. What I really want to see here is I think we could even flush all the way down here, possibly even revisit the 42.57. If we break that, we're going to be in some big trouble. But I don't think that that's going to happen. Not until we have to see where the market is at when we actually get a rate raise. Until that point, I think we might just play this big chop range until then. Even with the Russia-Ukraine stuff, I mean, it could develop into something more, but I don't think it's going to have that big of an impact on the actual market. I have to understand the market itself doesn't get affected by wars that much, I guess, unless you're affecting supply chains and constraints and everything. So just try to separate those two and just try to take the market for what it's worth. Right now, the market's really more concerned about rates, inflation, and how that's affecting companies right now. So again, I think we could possibly even drop down here or again around that 4,300 mark coming into this week. If we do run and test this, again, every time we break the 200, expect a reversal fairly soon. So we see the break here, and then we essentially hovered below it for not too long before we push back up. I expect the same thing again, unless if there's an emergency rate raise that does come for some reason. I can see this thing spiking way down and even hitting the 20 EMA and the monthly it could be a possibility at that point. Again, if we break that, I think we don't have a big enough catalyst to send this past this. The market is not going to crash, in my opinion, down at this level over what we're currently dealing with. But we have to see. Right. The only reason we typically crash is because it's something out of the blue. You look at the pandemic, right? The pandemic was completely out of left field. No one had dealt with it essentially during our lifetime, right? In this economy. And so it was completely left field. People were going on lockdown. People don't understand what is going on. That's when you start having crashes. Is when it comes out of left field. Now, all this stuff has been announced. All this stuff is out there. Inflation is out there, right? This isn't coming from left field. This is why the market's already priced in 12%, right? And so these kind of things aren't going to, unless something dramatically happens with the Russia-Ukraine thing, right? There is no panic that's, I think, going to push us and make us crash. I have to see. Maybe there's some report that comes out that exposes something, right? Exposes banks for some reason or whatever, like in 2008, right? Those are left field. We're all kind of aware of it, but when it comes to the surface, left field, when it hasn't been televised for months and years on end, right? That's when we crash. And so we have to see what happens with this, but so far, that's the kind of level I'm watching. If we do sell off more, I expect us to kind of hold this level. Again, if we come close to, we can even come down again to that 41 or 42K mark easily, I think, and still be perfectly fine. I'm still very bullish on the year. My thing is we have to get through this, what the market is dealing with right now. So Bitcoin, again, still holding good levels. Looking for a retest here at the 41,674 mark here. Looking for a bounce off this. Again, I think we're going to gravitate around this. We might even come and try to retest around that 40K mark and then start heading back up. Again, we want stocks, crypto, right? We want to break resistance and retest it, right? It helps build strength going forward. So this is completely normal. No reason to really panic here. Again, unless we break below that 32K mark, which we held, which I talked about before. So we have to see going forward. So the first one I got is Google. As far as my picks, Google, I think will do very well. It killed earnings. It's got a stock split coming up in July. It's still a long ways away, but if we do sell off more, I'm kind of watching essentially this 50 EMA weekly. So essentially that 25.56 mark, I'm kind of watching that mark. We've held this before, previously back here. So I'm kind of watching this mark going forward. If we do start to sell, it's going to have to really hold. If it does hold here, I want to actually try to ride this back up. Because I think once there's clarification this week, I think we'll start getting a bit of a rally again. As a strong possibility, and then we'll go into March, and then we'll start selling and chopping. I think when we start getting closer to that March FOMC meeting notes, or if there's any other events that happen before then. So again, trying to watch this. Again, now we're back below a lot of resistance. Your 47 or your 2760 and your 2800 marks. So now we might actually get a retest of that and get rejected. A very strong possibility we could pop on Monday, get rejected, and continue to sell going into Wednesday, and then get some more volatility on Wednesday before we start rallying. So that's kind of what I'm looking at. NVIDIA is the other one I'm watching. Again, chips. NVIDIA has earnings on Wednesday, so I really want to watch how this goes. Again, the 200 mark is sitting at the 230 mark. Wanted to kind of hold that. Again, it's already at good support right now. But the thing to keep in mind here, and two, is if China decides that it's going to have an alliance with Russia against the U.S. and Ukraine here, this could be concerning and actually possibly crater this further down. But we have to see. That's all just speculation. It's all rumor. We have to see how it plays out. But I want to keep this on watch for then. Again, most of the chips have done really well, and I think NVIDIA will absolutely blow it out of the water. So again, watch these levels. Want it to really hold again at 235 to that 230 mark. Be a strong support, and then play the levels, the 250s, the 255 levels. I don't see it breaking back over the 255 until actual earnings. So we may get a drop down to the 200, that 230 mark, and then pop back up to the 250 and wait for earnings before it pushes back up. So we have to see how that goes. LRCX, I think, could be a good sympathy play into all this. You have a strong support here at the 535. That's the 20 EMA monthly. So it's been hovering around this. As long as it continues to hold this, I really see it being a strong mover this week. Again, at least pushing up to the 598 mark. So essentially that 600 mark. Really want to watch this week is if it holds this zone and pushes back up to that 600. So that's a good 40-point move that I'm looking at. QCOM, again, another chip play. Watching this, same thing, same scenario. These are all good to watch. All the chips are good to watch, especially because this one had good earnings. Really hadn't fought back since then. So watching this 158 mark, essentially 157 mark, and then watching this gap, we have this nice pivot here back up to the 175 mark. So kind of really watching that this week. Shop is a big one because of Amazon. Amazon did really well, so I want to see how Shop does. Shop's really been playing this range pretty tight. So watching that, essentially that 800 mark up to the 920 mark. So if we do dive down into here this on Monday and we hold, it's one of the ones I want to grab, just like Google, and shoot this back up going into earnings. We might have a little bit of run up. As long as the market doesn't get too crazy, I think we can pull back up into the top zone before earnings. And then if they do really well, I can see a breakout of that 950 up to higher levels, possibly retest that 1,000 again, maybe break it if the whole market starts to rally at that point. But again, I think we're going to see a lot more of this chop until we actually get action by the Fed. But we'll see. Roblox is the other one that's got earnings. Again, this could be 50-50. It really just depends on what the market conditions are. But that lower level is that 50, essentially that 55 mark. You do have another layer of support here at the 61 mark. And then that top zone is really at that 70 mark. So seeing if the market continues to sell off, your first check is going to be that 61 mark. And then you don't want it to blow past the 55 mark. But I think it will hold this 61 mark going into earnings and then play up to this 70 mark. And then if they do good at earnings, I could see it blowing past the 70 mark moving forward. UPST is going to be interesting because of a firm. They are not the same kind of company. They just kind of IPO'd around the same time. So being said, they kind of run in parallel. It actually looks like we're having a nice wedge here. But same thing, it's got a pretty solid support here around this 200. So it's been gravitating around this 98 mark. We could pop down to the 88 mark. I probably more than likely would wait for this move down here before earnings. Again, if we gap down, I'm watching for it to kind of hold this mark and then possibly run it up until earnings. I don't want to hold it. I don't want to hold for earnings only because of the fact I'm not really sure how the market sentiment is going to change day to day because we get different news Monday, Tuesday, and Wednesday. With Wednesday, I think holding the most weight. So just being mindful of that. And then coin, just like I talked about with Bitcoin, I'm waiting for it to run up. We did have the wedge breakout. It looks like we're retesting. So I really want to keep an eye on this. We could go back down to the 180 mark. I think it's a strong possibility. If we do get there, I want it to hold that mark. We could even drop down to the 170 mark. Again, these levels here, when I call it these levels, you definitely want to keep tight stops on them. They break them, cut it, and then re-enter at that point. And then again, it's tight stop and try to ride it back up. Again, I think there's some good pivots here down in this area. I think, again, once all this Fed stuff starts clearing up, that these things will start running back to normal levels, especially the leaders. That's why I always talk about going with the leaders, because the leaders typically have the most strength and will bounce back the quickest. And then that allows you to, once they start running up and get exhausted, then that's when you essentially pull your equity in it and shift that into mid cap, smaller caps, the ones that have been kind of lagging behind, and just follow that money rotation. So if you've made it this far, hit the like button. I appreciate you. And until next time, I'll see you guys later.